Hello and welcome to your Daily Five with Erin Swenlin from decisionpoint.com. I have some great charts for you to see. There are five charts that I think you should see going into this week. So let's go ahead and get right into it. First, I did want to let everybody know that I run a free trading room on Mondays at noon Eastern time. I do this every Monday, and it is, as I said, for free. Just go to our website and you will see this particular ad. Just click on it and you can register for the trading room. All right, well, let's get started with the 5-month candlestick chart of the SPY. We use the SPY to determine what our signals are at decisionpoint.com. So I look at this chart all the time. Right now, as you can see on Monday of trading today on June 7th, currently we're seeing the SPY really stuck in this trading zone. And, we did hit some all-time highs back here on Friday, but really a lot of struggle going on right now. We have this double bottom, and while it is still technically in effect because we haven't dropped below the confirmation line, we're certainly not getting the follow through that we would have expected off of this bullish double bottom. And, we're still looking for higher prices at all-time highs. The PMO is certainly suggesting that. The PMO currently is about ready to trigger a buy signal. And if we can finish the day positive, I would expect to see that buy signal come in today. If we finish lower, it may not be today, maybe tomorrow or the next day. So what we're watching as well is the total volume. We've had very low volume on this consolidation that we saw right here. We had this big spike on total volume. We really weren't sure what was going on with that, but when we checked back, that was the day that AMC traded over 700 million shares, and it sort of tweaked the total volume for that day. But we do like to keep an eye on that to let us know if we have any climactic activity. Currently, the VIX is still above its EMA on our inverted log scale. We invert it because the lower side, oversold territory, would be a very high reading on the VIX. People are getting very nervous. So usually that's when you're going to see those reversals to the upside. And similarly, when it gets close to that upper Bollinger Band on the inverted scale, you're going to see a lot of selling, a lot of complacency. And in that case, you should start expecting some selling. But while we're seeing the VIX above that EMA, it really does suggest near-term strength for now. We look at the Swenlin trading oscillators, and it's kind of a different story here. We do have declining readings right now on the STOs, and I really find that these indicators are very, very prescient. And to see these indicators beginning to top out in somewhat overbought territory suggests to us that we're going to start seeing some lower prices at this point, especially now that I'm looking at this chart today and I'm not seeing price breaking out just yet. So I think these Swenlin trading oscillators are giving us a little bit of warning here in the short term. Now, on the other hand, we do have rising momentum within the members of the S&P. So we have about 54% that have positive momentum, and you can see that is on a rising trend. We also are looking at about 69, 70% of stocks above their 20-day EMA and a rising trend there. So it's not all doom and gloom at this point, but it's certainly, we're seeing some deterioration as these indicators right here, the price above the stocks above their 20-day EMA is kind of topping out here at 70%. But the main problem I have are these declining Swenlin trading oscillators. They're usually very on it, as I said. And so seeing those turning down doesn't give us a really good feeling in the short term. But let's look at the intermediate and long terms. And for that, I'm going to pull out my golden and silver cross indexes. These are exclusive to decisionpoint.com. Carl Swenlin, my father, came up with these indexes. And wow, we can't believe that we didn't do this sooner. We've got this, the Golden Cross Index is pretty easy for people to understand because most of us are familiar with a Golden Cross where you get a 50-day EMA going above the 200-day EMA or a simple moving average. It's still considered a Golden Cross. So what we do is we measure how many of the members of the S&P have their 50-day above their 200-day. That's the Golden Cross Index. The Silver Cross Index is very similar, but we use crossovers to the upside of the 20-day EMA going above the 50-day EMA. So this tells us how many stocks in the S&P have their 20-day EMA above their 50-day EMA. If you have a golden cross, that means you have a long-term trend model buy signal. If you have a silver cross, that means you have an intermediate term trend model buy signal at decision point. So what are these indicators telling us? Well, the BPI, I think a lot of people are familiar with. This measures how many in the S&P have a point and figure buy signal. We don't do point and figure, but the BPI we find is a little bit more sensitive than we see with the silver cross and the golden cross. So the BPI still looks fairly healthy in the short term because we do have these rising bottoms on that indicator. And it did manage to bottom above the signal line twice. But the big problem we have right now really is on this golden cross index. We have a negative crossover of the golden cross below its signal line. We don't see that very often. This is especially a slow mover because we're measuring the slower moving averages, the 50 and 200-day moving averages. But this is a big problem, seeing this negative crossover, and that does not bode well for the intermediate to long term. And until we start to see some improvement on that indicator, we're going to be getting more and more bearish in the intermediate and longer terms. Now, as far as the intermediate term goes, the silver cross did manage to, not slide and continue its slide. It has flattened out a little bit at an 83%, which is still a pretty much an overbought reading, but I think it does give us a little hope, if you will, in the intermediate term that we're going to see not a huge decline, but at this point, I really don't like the way those charts are shaping up. Let's go ahead and look at gold. Gold, of course, has been on a huge run to the upside, but we saw on Thursday a big drop. It did take price down to that 20-day EMA. We did get some follow through the next day as far as, a bounce off of that EMA, which was positive, but we still haven't really recaptured this rising trend, which honestly is okay because it's very difficult to maintain these very steep rising trend lines. So seeing it pull back like this, I suspect we'll be drawing this particular intermediate term trend line back up. And as you can see, even with that very deep decline and that very deep intraday low for gold on Friday, it'll still be above the rising trend line here coming out of that March bottom. So we still think that gold looks good. We have this longer term declining trend line here, and we could end up seeing price test that area and that 50-day EMA. But like I said, if we drag this trend line back up, even a drop down to that 50-day EMA, you're not going to lose the overall rising trend that's going on in gold. So it's really a natural occurrence at this point to see this pullback, to take this more steep rising trend and soften it a little bit. And that's what we saw on Thursday. But we did get a nice rebound on Friday. And I do happen to know that GLD is currently up slightly as of the recording of this show. Now, we've been a little bit concerned with gold in that we've seen the PMO turn back down. But as you can see, as of Friday, it was avoiding that crossover sell signal. We also track sentiment on gold. And as you can see, we're looking at the bearish sentiment. This basically, we track the premium and discount for the Sprott Physical Gold Trust. And when you have very high discounts, that means people are very bearish. And sentiment being contrarian, we always look for the reverse. So back here, we actually had some premiums, and typically that's going to come before a decline. Now you can see that the discounts now have really shrunk. So that means people are getting more bullish about gold, which I think we all have been familiar with as it's been talked up a lot lately on this rise. So when we start to see these leveling off, these discounts leveling off, we need to be careful because, like I said, typically that's when we're going to start to see that move to the downside. So, on Friday, we got a little bit bearish there with those discounts. So I don't think, we're not at that premium level. And so I think we still do have some more upside here. And like I said, I think it's just a natural occurrence to have lost that rising trend line. All right, and that leads me to my last chart, which is my diamond of the week. I do DP diamonds. I give you 10 or more selections per week of diamonds in the rough. And if you watch the pitch, I was pitching the marijuana stocks, and I'm still very bullish on these stocks. And I know a lot of people aren't very familiar with a lot of those weed stocks, and they are very speculative. So I'm bringing in the alternative harvest ETF with the clever symbol of MJ. And I really think these cannabis stocks are still poised to really do well here. We did level off a little bit here on MJ, but everything is still looking great here. We have this bullish falling wedge. We got the breakout. We got the breakout above the 20 and 50-day EMAs. And even though we are consolidating a bit right now, still price is hanging out above that 20-day EMA, which is what we want. Additionally, PMO buy signal, and the PMO is now moved into positive territory. This signal came in very oversold territory. So it came right off the breakout out of this bullish falling wedge. And then, of course, it's got a great StockCharts technical rank among ETFs. And as you can see, it is beginning to slowly outperform the S&P. One of the reasons I'm very bullish on these stocks is because Congress is getting ready to look at some legislation. It's been brought forth by 2 Republican congressmen, which tells me that we're going to get bipartisan support for the legalization of marijuana on a federal scale. This legislation would decriminalize marijuana. It would offer them opportunities, dispensaries, to use the financial system, which they aren't allowed to do right now. It will allow the Veterans Administration to dispense medical marijuana. This is going to be huge. It's going to take it off Schedule 1. Marijuana stocks are going to just take off. And I think this is exactly the place you are going to want to be. Just keep an eye on that legislation, as I will for my DP Diamond subscribers. If anything starts to not look good on these marijuana stocks, I will certainly be letting everybody know. But for now, that breakout and now this consolidation on top of the 20 and 50-day EMAs, I have to say I really love this chart. It's just getting better. And a lot of those marijuana stocks are looking good. I talked about ACB. I talked about CLVR, Tilray looks good, TLRY. There are a lot of opportunities in this space, and I am taking advantage of it because, full disclosure, I do own MJ. And that's all I've got for you on your Daily 5. I did want to let everybody know I'm at decisionpoint.com. I do an overall market assessment in the DP Alert. And in DP Diamonds, as I mentioned, I give out my stock picks. And if you are watching right now, we have a limited time. Save 50% off your first month at Decision Point. Just use the coupon code SAVE50, and that first month will be half off, and you can give us a try for a full month at half price. And that, my friends, is your Daily 5. I want to thank you for watching, and of course, happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.